Have you ever found yourself casually experimenting with a demo trading account, just clicking buy and sell buttons for fun? And then, out of the blue, you decide to go all out and buy a massive chunk of a stock. To your amazement, that stock starts climbing in your favor. So, what do? You keep hitting the buy button like there's no tomorrow, and bam! Suddenly, your account balance is showing a massive profit. Now imagine if that profit were in a real live account. Well, in a jaw-dropping twist of fate, a trader in France, Harouna Traore, accidentally made over $11.6 million in profits by trading in his live account when he thought he was in his demo account. But how did earning these millions turn into his darkest nightmare and a disappointment of a lifetime? Harouna was just an ordinary guy taking a day trading class in Paris to learn the ropes of trading equity futures. With dreams of mastering equity futures trading, he opened an account at Valbury Capital, a UK brokerage, investing €20,000. From his home, he delved into trading using Valbury Capital's platform, unknowingly setting the stage for a remarkable journey. Initially, he was just playing around with simulated demo trading, as many beginners do, to get a feel for the platform. But then, something remarkable happened. In a twist of fate, he found himself in a trade position worth more than €1 billion in European stock futures. However, Harouna was unaware that these trades were not on his simulated demo account. These trades were real, and they were happening in his live account. To make matters worse, his account was now in the red, showing a loss of over €1 million. The disbelief and stress were obvious as Harouna grappled with the realization that he had gone from a €20,000 account to a €1 billion trading position in losses, all while believing he was in a demo environment. Most people might have called it quits at this point, but not Harouna. Instead of throwing in the towel, he decided to pivot his strategy. He shifted his focus to trading U.S. stock futures, determined to make the most out of a seemingly dire situation. Incredibly, he managed to build an even larger position in U.S. stock futures, amassing over $5 billion in value, 5 times more than his European stock futures position. Whether it was sheer luck or his aggressive trading approach, Harouna's U.S. stock futures position began to soar in value. The unrealized loss of €1 million he had initially faced was gradually transformed into a staggering profit of over €10 million, equivalent to $11.6 million. Harouna's roller coaster journey had taken an unexpected turn toward success. With a sense of relief, Harouna decided to halt his trading activities. He couldn't believe how he had turned a €1 million loss into a multi-million-dollar profit. It was a remarkable turn of events, but the story was far from over, and Harouna's nightmare began. Upon attempting to cash out his hard-earned profits, Harouna encountered an unforeseen obstacle. Valbury Capital, the brokerage firm, was less than thrilled with the situation. They claimed that Harouna had violated the terms of his brokerage contract by exceeding trading limits. His account was supposed to be limited to just 10 contracts per day. However, due to a technical error, Harouna had managed to purchase over 40,000 S&P 500 futures contracts worth more than $5.3 billion and 34,000 Euro stocks 50 futures contracts worth over €1.2 billion. In total, he had accumulated a trading position worth over $6.5 billion with only a €20,000 account. This technical glitch was the root cause of the confusion, leading Harouna to believe he was trading on a practice platform with no trading limits. Valbury Capital's response was far from what Harouna had hoped for. They refused to pay him, forcing him to take legal action to claim the millions of dollars in profits generated by his trades. As the lawsuit against Valbury Capital remains pending, it's worth noting that the brokerage firm decided to shut down its UK operations in 2020. They attributed their profit of €10 million in 2017 to their own hedging activities, distancing themselves from Harouna's profits. In 2020, the CME Group, which offers the trading of S&P 500 futures contracts, issued a disciplinary notice against him. They accused him of committing an act detrimental to the interest or welfare of the exchange. As a result, Harouna was ordered to pay a $10,000 fine and serve a 2-year suspension from accessing any trading floor owned or controlled by the CME Group. While the lawsuit against Valbury Capital remains unresolved, Harouna's experience serves as a powerful reminder for traders to approach the markets with caution, humility, and a solid trading plan. His story, although exceptional, offers valuable lessons for traders of all backgrounds, emphasizing the significance of risk management, discipline, and a well-defined trading strategy. As you step into the financial markets, Remember that the path to success is often riddled with unexpected twists and turns, and the key lies in how you approach them. What do you think? Will he win the lawsuit and get his money, or is it a lost cause? And does he truly deserve to receive the money? Share your thoughts in the comments below.